Okay, everybody, here we go. It is me, Gregory Mannarino, Friday, August 4th, 2023, and this is my pre-market report. Let's just start off with this. Risk in this market remains extremely elevated, and we should really pretty much be ready for anything. I know you are if you follow this blog. Yesterday, it seemed just a little bit like the cavalry was about to arrive. I'm talking about the Federal Reserve stepping in here and propping this whole thing up. The 10-year yield did come down slightly yesterday. The relative strength of the dollar reversed from being higher to lower. The market seemed to like that a little bit, but then it reversed the other way as the day went on. Right off the top, when this whole thing started several days back, when the MMRI crossed 250 and we started to see this market really become unhappy about it, you and I discussed right here how action needed to be taken by the Fed if, in fact, they want to keep this market propped up. We're going to need to keep our eyes on this. They could run out of time. What do I mean by that? If the market sees that the Federal Reserve is unwilling to keep it propped up, we could see potentially a severe sell-off in this market. Again, look, this market is in a place that's way further out than La La Land. You all know that. I've covered this since I don't know how long. It makes no sense. Normal things do not matter to this market when you have a situation like this, like PE ratios, forward guidance. It doesn't matter in an environment where central banks are propping this whole thing up by buying debt. And as you and I have seen clearly, as soon as that 10-year yield crosses 4%, the market starts to get a little shaky. We're at 4.18 right now. Yesterday we hit 4.2 on the 10-year yield. And as we can see, this market has been selling off. So with that, this is a dangerous situation for the market here. And I would believe that most of you out here want to see this thing sell off or get real. It's going to at one point. When? I have no idea. I don't talk about it. I don't speculate on it. I just watch that debt market just like you do, following the MMRI. Again, free to everybody. Link in the description of this video. With that said, crude oil continues to get bid higher. No surprise to you, me, or anyone else who follows this blog. Crude, since it was $67 a barrel, has really taken off, and I think there's a lot more to go here to upside. Commodities in general, as you know, I've been pushing this. I've been talking about this for the longest time. Commodities. I think most of you would agree on that. These are real things in a market that is simply unreal, okay, with euphoria and FOMO, or fear of missing out, and this somewhat orgasmic state of the market. With that said, again, with risk being where it is, you got stock futures this morning. Trading doesn't start for about an hour and a half from the time I am doing this video blog, so this can clearly change. But we got stock futures flat to slightly lower. 10-year yield remains way elevated. Dollar strength is higher this morning. Crude catching a bit, as I said. Cryptocurrencies under some pressure right now, especially XRP and Litecoin. You got silver under a significant amount of pressure. Gold also under some pressure right here. And that's kind of where we stand. The MMRI, as I checked it just prior to this video, is 266.8. Again, if we start to see 270, 275, this thing bang, 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 rapidly rising, you and I are going to need to reevaluate the nature of our long positions here. Most of you know I own a lot, and I mean a lot, of JEPI. I am, in fact, looking for more reasons to to buy if I can get it cheaper. But again, the thing about JEPI that I love, and I think most of you know this already, I've talked about it over and over again, is you get paid a nice fat dividend every single month, regardless of where the market goes. But again, we need to watch risk here. All right, now back on, this is something else I want to talk to you about. So we got this private sector jobs number today, and apparently it came in better than expected. But I want you to try to balance this out. So they want us to believe that the hospitality sector, hotels and bars, are hiring like at gangbuster speed here. But if that's true, that the hospitality sector is doing so well, why is it, in your opinion, that Airbnb is saying that their bookings are way, way down? You see, that's the truth. In my opinion, when they flash these numbers at you via the propaganda ministry and they want you to look here, don't look over there, they don't think people are going to say, hold on a minute, how can we verify this? To me, okay, when I heard this, I was like, okay, so we're adding hospitality jobs, hotels are hiring, bars are hiring. Then you hear that Airbnb is saying that their bookings are way decreased. There's your reality check. All right, we all know that what comes out of that box over there. I'm talking about I got my program TV over there, and I got Bloomberg on right now, and they're trying to tout this non-farms jobs report number, and it's fake. It's fake data. Again, you can't just say, okay, hotels are hiring and bars are hiring, but Airbnb is reporting, lower bookings. No, it doesn't make any sense. So the truth of the matter is, this is another fake data point that, again, the illustrious imbecile sitting behind the Resolute desk, who is, wants to be reselected, of course, and probably will at this point, honestly, because he's doing everything right for those that want to see this country brought to its knees. And believe me, this is pretty much the entire world at this time here. But that's a whole other story. Maybe we'll talk more about that later. I think it's pretty obvious what's going on here. It's pretty twisted to me to think that you and I are living, first of all, under the rule and guide, or the central banks are the government of the world, and they try to convince us that, no, that's not true. How is that? When they control the economy, they control the financial system, they control the financial markets. It is them. They run it all. And it's a major deflection or distraction, because if people really understood that they have no representation whatsoever, that central banks are, in fact, sovereign entities who have no higher authority other than God to answer to. You see what I'm saying here? And God doesn't seem to be stepping in here anytime soon, as the middle class is getting exterminated on a scale that we've never seen before. And the lies and the distractions and deceptions are getting bigger and louder. People are suffering here. It's amazing. It really is. People now carrying their heaviest debt burdens in the history. This is only going to get worse from here. They're being pushed to the lower rung of society, just as you and I have discussed for over 10 years. We're seeing this in our freaking face. But again, look, besides the doom and the gloom, and some people are going to take it that way, there's opportunity here, okay? Understanding that, first of all, we need each other more than anything else. Love each other, care about each other, be charitable. The three things I leave you off with every single Friday, and you're going to hear me say that later in my live stream, 4 or 5 p.m. I hope to see you there. But at least we're taking action, you and I. We're betting against the debt. We're becoming our own central banks. We're gaining exposure to commodities, none more so than silver. I think if you have to own one asset, that would be it. You know that already. I've told you this a gazillion freaking times. All right, so anyway, that's the story this morning. The main theme that you want to take away from this video is risk. Risk in this market is definitely in a danger zone. The bond market is flashing at least a very bright orange here. We're not in the red yet. We could get there. Again, a loss of confidence in the market, not believing that the Federal Reserve is going to keep this propped up, could lead to a very severe sell-off here. Let me know if that does it make sense to you? Here's Greg Mannarino's question as I leave you off here. Do you believe that if the market loses its confidence, get the word? It's a con job, that the Fed is not going to backstop the market? Why would people want to be here? Why would institutions want to be here in a market that, again, makes no sense based on every single thing you want to look at it? But we'll see. Again, keep your eyes on that MMRI. Let's watch market risk. I will keep all of you on top of this, as I always do. And we got this. In my view, again, we cannot be beaten. We're invincible because we have each other. That's number one. Number two is because we're taking action. Understand? All right? Love you a lot. Please share the video. If you got something out of this video, please, those thumbs up, please click that. It gets the video out there. It gets it seen if you want people to hear this kind of stuff. And I'm counting on you to do that. All right, see you later, 4 or 5 p.m. Eastern time for my live stream. I really hope to see you there. Have some questions ready for me. That's all.